Well, the volatility in silver continues to stay with us. We're seeing big moves playing through once again on the trading floors. We're seeing spot silver down about 13%. We're seeing platinum down 7%. We're seeing gold down 2% on seemingly no real new news. Now, I will say that the implied volatility in these markets, the realized volatility in silver, is still very high. If you have a look at spot silver, in terms of 1 week implied volatility in the options market, it's trading at 100%, which is really elevated. It sort of implies daily moves over the next week of 6.3% up and down. So when you've got volatility at such high levels and you've got fairly thin liquidity at the top of book, you can be expecting very sharp moves on seemingly no news. So obviously that plays into your position sizing, your risk management. But this is a tough market really now for silver and some of these precious metals. If we have a look at the backdrop, we've got Bitcoin trading down into 71,000. Looks like it can't find too many friends at the moment. Rallies are being sold. If you have a look at the equity markets, we're seeing big rotation out of tech into value areas of the market. We've seen software under all sorts of pressure recently, but certainly value is really, and more defensive areas of the markets are starting to outperform. And today we've seen the Kospi, one of the really strong markets of late, that's down 3.3%. The dollar's having a bit of a rise. That's finding a few friends in this market. And you've also got a situation where volatility on a cross-asset basis is rising as well. So what we saw today I think really comes down to China. I think that's where this has all started from. We haven't seen any margin hikes on the CME, which of course has been a big component of what we've been seeing. But around 1 p.m. Eastern Daylight Time here in Australia, we did see Shanghai futures really starting to crack. The selling really came through very strongly indeed in the Shanghai futures. They fell about 16%. We saw the SDIC silver trust fund in China, which is the real vehicle that a lot of retail traders have been piling in to get their exposure to silver as a momentum vehicle. That dropped 10%. That's down 10% for 4 days in a row. That's the limit that it can fall. And certainly people are getting out of those silver positions and potentially looking to hedge some of the exposure through selling of the CME futures. And what we saw at that time in the Shanghai futures dropped at that time at 1 p.m. and fell very sharply as the CME futures in the US, they fell about 15%. We saw big volume playing for about 36,000 contracts traded, and the spot price obviously came down with that situation as well. So it does seem that this is really perpetuated by the moves in China. We've fallen to a daily low of 83.70. Obviously, people are really quite concerned about where this could go. The volatility is very high. And one thing I say, if you are swimming in these waters, be prepared to, obviously be consideration whether you want to hold that risk into the session ahead when you can't be in front of the screens, and just be open-minded that the market can move very aggressively in either direction given this volatility. Let's see how it goes and trade at Pepperstone.